Hello everybody, my name is Melissa Allen. I'm a venture capitalist here in Toronto. Today I'm joined by Chris Creatura, who's a former investment banker turned investor and entrepreneur. And here we're going to talk about all things alternative investment.
Yeah, like Melissa said, former investment banker, left the investment banking world 2 years ago to start my own investment bank, which has kind of evolved into this multifaceted shop where we build things and help people build things. So lately, it's been a big focus on crypto, which we'll talk a bit about. It's great to chat.
Chris, I'm so excited for us to have this discussion. But first, before we jump in, I'd love to know about your origin story in more detail, and then we'll talk about mine too, because I feel like that's so important to learn about the path of how we get here. Because a lot of people, I feel like, make assumptions that in order to get into wealth management, in order to get into investment banking, venture capital, entrepreneurship, you have to come from money. So let's hear your story.
So my path onto Wall Street was super unorthodox. And so I was actually a philosophy major.
Philosophy? Not quite numbers
Not
and
many
finance.
Not many of us on
Great.
Wall Street. From there, I had a bunch of energy, started a little construction business. Ran that for a few years while I was still in college, and that's how I kind of got interested on the business side of things. Started picking up as many business and accounting and finance like this as I could, and then decided that I could always come back to construction, but getting a proper sort of business background would be useful no matter what. So ended up getting hired by Deloitte into their transaction services team. So we did deals, basically M&A. Investment banking was kind of a natural progression from there. A couple of years later, did that for a bunch of years. Half my time was in New York City, sort of the last 2 years. And that really brings us to 2 years ago when I wanted to do something a bit more entrepreneurial, but still using my skill set. And started my own investment bank.
Just like
2 years ago.
So how I got into the venture capital space was I was working at Desjardins as a financial advisor for 5.5 years. It was fun, cool, great, and I got to help people. I was really community focused and building my own book of clients that way, like within my community. Women, professionals, the Caribbean community, the Black community as a whole, people of color. And I found that while I was really servicing my clients in terms of financial literacy and getting them on budgets and educating them in terms of investments, what was really missing was mindset and also opportunities and pathways to wealth. And I felt like I wasn't doing enough in order to really address those two other key ways or key components of wealth building. And so I said to myself, how do I combine my love of finance and investing with tech and the tech world that I came from? And I have all these friends that worked at startups that are starting to actually grow. I have like a few friends that were early employees at Shopify, for example. So how do I combine those two worlds? And then on top of that too, I just started to see the fact that technology was becoming more and more integrated into our lives. And it was becoming scarily biased towards the people that were actually building that technology. Like, no offense, but i.e. white guys. That's okay.
Fair enough.
So I said, so what is a way that I can make an impact on how technology services humanity as a whole, inclusive of everyone? How do I make great money, hopefully? And how do I create opportunities for everybody to build businesses, build wealth, and help the Canadian economy? And of course, finance, venture capital. And so in 2018, I became super obsessed with it, read everything I could about it. There's a great book that if you want to start in venture capital called Venture Deals by Brad Feld. Next thing you know, I'm getting introduced to three brothers who want to start Canada's first VC fund focused on investing in BIPOC founders. And so last December, I ended up selling my book of business and joining full time. And it's been an incredible experience. All right, so crypto is so exciting right now. It's so hot. I would love for you to tell myself and everybody else, how did you actually get into crypto in the first place?
I feel like we've been hearing about Bitcoin, at least I have, since around 2013, back when you pretty much needed a computer science degree to figure out how to get a wallet and trade it. So I did try, and unfortunately I gave up. The way kind of Bitcoin has worked is it goes through these hype cycles, and then you kind of stop hearing about it for a while, and then it's back bigger than ever. And so it was back bigger than ever in 2017. when I was working in New York, and that was all anyone was talking about. At that point, there were platforms that were a lot more user-friendly. So I was able to buy some Bitcoin. I kind of went in the reverse direction. I bought the Bitcoin and then I learned about it.
What resources in 2017 did you use to at least help guide you to buying your first crypto? Do you remember?
Yeah, so you have to sort of kind of sift through who's just kind of hyping up whether it's Bitcoin or any cryptocurrency, and who's really thinking about it academically. I think one trick is if someone is talking about Bitcoin or anything in crypto in the context of making money.
Wow, yes.
It's not necessarily for sure a trigger that you shouldn't listen to them, but at least think about it.
Huge tip, because there's so many people out there, individuals who are promising, if you do this, if you listen to me, if you buy this course, you can become a Bitcoin millionaire too, right?
Yeah.
So it's really being super wary right now because there is a lot of predatory information out there.
Yeah, you kind of have to develop your sense of salesmanship when you're being sold and when you're being taught or educated. So finding people who think about these things academically is huge. And if you can sort of see that they have a passion for the technology versus a passion for how much money they're going to make. Right. And you can gather that pretty quickly.
So Chris, what is cryptocurrency?
To describe cryptocurrency, I'll tell you about our current configuration quickly, and that's basically any record of payment, how much money people have, any movement of currency now is all kept track of by a central sort of power authority.
So when I log into a bank, I have to download my statements of my transactions.
Exactly. So your bank or Visa or any of these sort of institutions keep track of the movement of money. And what cryptocurrency allows is for the record to exist basically on the blockchain, which is just in software, ones and zeros. And so we're able to create a monetary system that doesn't rely upon concentrated power to keep track of who's sending money to who and how much money everyone has.
So I don't need to dig through my wallet to find a receipt that shows my transaction. It's already recorded within the cryptocurrency. Yeah, okay.
Right. And so the software keeps track of the entire monetary system, and we don't need a central bank or banks or even payment companies. It all just happens.
Without a middleman or a middle person.
Right. Exactly.
Okay, I think I got it now. Thank you. At the end of the day, from what I've just witnessed with this whole trajectory of Bitcoin and other cryptocurrencies, that it's nice to be able to have this extra asset class store of value. And it's inevitable. I think that Bitcoin is going to be a part of our society moving forward. I'm hearing about major banks actually creating entire programs and secret projects that involve investing in and buying in and being able to trade and distribute crypto. So it's clear then that if that's a signal that is going to be a part of our future moving forward. So regardless, I think it's important for all of us who want to be ahead of the curve to educate ourselves on at least how to obtain it, hold it, and transact with it. So can you let me and all of us know how to actually buy an Ethereum or a Litecoin or a Cardano or a piece of Bitcoin? Sure. How do you do that?
The most popular exchange is Coinbase, and it's very easy to set up an account. I think it nowadays takes about 10 minutes. You download the app, you upload certain credentials, you prove it's you, typically just by kind of scanning your face. Different exchanges have different ways of funding your account. Sometimes it's an e-transfer.
Sometimes it's a wire. That's where I got lost, I think, with Coinbase. I was I have to go to the bank and do a wire. I was oh.
Yeah, sometimes you can connect your bank account and just do a transfer. For Canadians, Newton is really easy because it's just an e-transfer. Now a wallet, the easy way to say it is this is where you store your crypto, but that's not really how it works. So the wallet doesn't actually hold Bitcoin, for example. Okay. The fact that you own a certain amount of Bitcoin is locked into the blockchain. So the blockchain is just a record. The wallet just holds your key, which allows you to access that Bitcoin.
Can't use that key.
Yeah, if you lose it, it's gone forever.
Yeah, I think I heard that something 18% of all Bitcoin is locked, it's locked behind lost keys forever.
Yeah, then it's hard to know exactly how much, but yeah, something like 3 or 4 million Bitcoins are functionally lost.
So what are the pros and cons of investing in cryptocurrency?
Well, the cons are that it's risky,
super high risk, right?
Like any kind of alternative investment. It's something that You should definitely not invest more than you're willing to lose. So just like the early internet days, there's a lot of stuff that had no value. So the trick is finding the stuff that does have value, and that's where the pros are. So Bitcoin offers this revolution in decentralized money. Ethereum offers this revolution in computing power. And so investing in crypto now is the pro is being part of this revolution, it's like investing in the internet in 1999. So Melissa, we're going to get into a bit of a conversation about private investing. Do you want to give a brief overview?
Absolutely. So private investing means you're investing in companies that are essentially private, meaning that they're not publicly listed on the stock exchange. And you usually hear about them just through your own network.
Okay, so let's talk a bit more about that, but first maybe define a few key terms, because it gets pretty jargon.
Absolutely. All right, so within the private investing sphere, you have private equity, which is an umbrella term, and then you have venture capital, which is an asset class and a type of investing. So venture capital means you're investing in companies at the earliest stages of their growth, right from the very beginning to maybe later stage, right before they're about to IPO, which means initial public offering, which is also known as listing on the stock market. So when I just have an idea for a cool new product or technology, I need that initial injection of capital. So typically where that capital comes from is I either bootstrap it myself, which is often the first source of income or first source of funds that founders go to fund their company, or at least to fund their minimum viable product, which is like the bare bones product that they need to get out in the market.
And when you say bootstrap, you mean using their own money or money generated by the idea
Great
itself?
idea, using their own money. Like, their savings, their credit card sometimes. I don't recommend that, but it happens. It happens, exactly. Or by, even having to cash in some investments. So that's typically the first round of investing before we even get to VC. The next round is the friends and family round. So that is a round where you're basically asking your rich aunt, your mom and dad, your best friend who just won the lottery or who's a lawyer at some fancy firm. You're asking your network to help, invest in your product, and in exchange, they'll get a piece of equity. So they'll get a slice of ownership in that company. And then after that friends and family round, that's when you've built out a product, it looks interesting, you want to keep moving with this business. So you go to the angel round, and that's when you seek out high net worth individuals. You pitch your idea, you pitch your product, and they will invest a certain sum into your fund, again, in exchange for equity.
And this looks similar to what we see on like Dragon's Den or Shark Tank.
Exactly, perfect example. Exactly. And so now that we've accepted this angel investment, we're allowed to, bring our product to market, for example. We're allowed to get to our next important milestone in building our business. And at that point, if we really want to supercharge our growth, then we would go to venture capital firms and we would pitch them our startup.
And how can everyday people get involved in this stage of the investment cycle?
No, that's a great question. So traditionally, private investing requires that you be an accredited investor, which can mean either as a Canadian, individually for the last 2 years, you've made $200,000 a year growth, or as a couple, you've made $300,000 a year gross, or you have liquid, i.e. in the bank account, in investments, liquid investments, you have $1 million. However, a lot of us are just starting out on our investment journey, and we might not have reached that accredited investor status yet. But there's other ways of investing through venture capital and angel investing in startups. And so my favorite way is to participate in an equity crowdfunding platform. There's a lot of great platforms out there where you can go on there, you can see which companies are looking to raise capital, and then you can contribute like as little as $100. So Chris, we've talked about several different forms of alternative investing. We talked first and foremost about how important it is to invest in yourself. We've talked about cryptocurrency, we've talked about angel investing in venture capital. Now let's talk about a really hot topic in Canada, especially if you live in the major cities. Let's talk about real estate.
Yeah, so my first foray was in 2014, and I bought an investment property. And it was super informative because I sort of treated it like a business. And in a lot of ways, it's similar to one. You've got a revenue stream, you've got a cost base. and you're typically buying with leverage, with a mortgage. And so those are kind of the fundamentals of a business. So I treated it just like purchasing a business, evaluating the cash flows, and deciding if the price was worth it for me. And then of course there's the kind of particular risk to real estate, which is the appreciation of the property or lack thereof, and whether or not you can get and hold on to a tenant. So those are kind of the added risks that are different than from other kinds of businesses. Yeah, I mean, we started off with two pretty high risk types of investing, which is crypto and VC, and real estate is considered more of a safe investment. But there is this, barrier to entry, which is it can be hugely expensive, especially if you're in major cities.
Absolutely. Now, getting into real estate as a young person in Canada, oftentimes from a major city, it's difficult, but it's not impossible. There are ways around it. Me personally, I don't come from a very wealthy background. I come from a single parent home. We did live in poverty more often than not. I worked a lot of jobs, a lot of side hustles to get on that property ladder. And on top of that too, I joined forces with people in my family in order to buy my first couple of properties. Now, I'd say fast forward 5-8 years, property is super expensive. And a lot of millennials, their incomes just aren't able to justify them buying into even a condo in Toronto. But I think it's really important for all of us to understand and get the mindset and think outside of the box of having different ways of getting onto the property ladder, right? So one example could be through equity crowdfunding. You could buy pre-construction, where you're just putting in deposits over time to make up the down payment. You could go in on a property with a group of friends, and also going outside of the city, in order to purchase a property, within a couple of hours commuting distance of Toronto. Get creative. I've even heard of people, there was an article about somebody who was renting out their balcony for $25 an hour. And, Airbnb is coming back in, so creating an income property through Airbnb, that's another way. So the most important thing though is getting into the property ladder. It's really getting into the mindset and setting that goal for yourself, and then making a plan of how are you going to earn and attract the income in order to save for that critical down payment.
So we've talked about a bunch of different kind of alternative investments, but one last one that I'd like to drive home is investing in yourself / investing in your own startup. And that can be money, but it's also time. And I think the important thing to realize about entrepreneurship is even if the venture fails, you're building up a ton of social capital, of experiential capital, because you are, what we call in the arena, meaning you're not a spectator.
You're on the
you're
court.
Actually, you're on the court. You're taking the bruises and the bumps and you're learning from that, and you're demonstrating something. I mean, you're actually demonstrating a lot of things, because it's such an enormous undertaking. And so it's the type of thing where even if it goes to, zero, meaning, the venture folds, you're coming out of it with a lot more than zero. And I think a lot more than almost anything else that you
Absolutely.
can invest in, because, you in some sense are kind of the product of that success or failure. And
you're the CEO of you, right?
Right. Yeah.
Exactly. And then on top of that too, no matter what investment you choose above and beyond investing in yourself, it's really important to be really engaged and passionate about it, and about learning about it, because that's what will help you drive the returns that you're looking for. And so thank you for attending our session on alternative investing. It was super fun. We had a great talk.
Yeah.
I think so. If you want to learn more about myself, just look in the information section and contact me. I'm on LinkedIn, I'm on Instagram and Twitter, Mel Talks Money.
Yeah, super open to any kind of chat on any of the platforms. So yeah, I look forward to talking.
Thank you.
See ya.